What does all of this mean for the global economy, for global markets, and where does it leave India, our own tryst with the US in getting that trade deal done? Let's discuss this and more with Jahangir Aziz, Head of Emerging Market Economic Research at JPMorgan. Jahangir, morning, great to have you in. So there you see, I mean, the tone is always right, the smiles are bright, and I think the teams have done their homework in the background, right? That this framework is more or less done. So what is your base case that you're going with? That, they reduce tariffs to what levels? I mean, does global trade, free-flowing global trade start between the US and China? And if yes, what does that mean for the market? More animal spirits, more upside?
So we might be less enthusiastic about the Xi Jinping-Trump meeting than you are. So we basically think that things are going to go back to what it was pre-October. So if you go back to the pre-October, you had about 35-40% tariffs, and there were talks that they were going to come to some agreement on rare earths in exchange for possibly some technology, restrictions being eased. And then in October, not the U.S. Treasury or the U.S. Trade Representative's Office, but the Department of Commerce put out a series of technological restrictions, which led to this, increase in rare earths restrictions, and then was followed by the U.S. threatening 100% tariffs. Our view is that we are probably going back to pre-October, so around 30-35% tariff on China, and maybe some easing on trade restrictions, not just from the U.S., but also from Europe. But beyond that, we don't really think that there's going to be anything fundamentally new that will come out of these meetings.
Do you expect a deal? What's the outcome here, Jahangir? Just in terms of actually, will there be a document? Do you expect like a joint press conference?
My guess is, my guess is there's going to be some form of communication either from the U.S. Secretary Bessent after the meeting, or from the Chinese side, or both together. But I doubt whether the two presidents are going to have a joint statement. So that I don't expect. But there might be something, joint communique from the two, the vice premier from China's side and Secretary Bessent from the U.S. side. That is possible. But then, when we talk about deals, I mean, we've talked about, lots of deals being done, but none of these deals are actually negotiated or valid trade agreements. None of them have been passed by Congress. And I think you were flashing it a few minutes ago that the Senate had already rejected the tariffs on Brazil and also on Canada. So until unless these trade deals are actually signed into trade agreements, their validity doesn't really exist in law. And then you run into the November 5 Supreme Court hearing on IEEPA. All of these trade deals are sort of based on IEEPA kind of tariffs, right? They're not really based on other specific tariffs. So if the court basically says that the lower courts were right and that IEEPA tariffs are invalid, then we're back to square one. Because none of the trade deals have been converted into trade agreements, so they don't stand. Therefore, you need to go back to the drawing board and restart all of this with new tariffs in different sections of the U.S. trade acts being used. So I think, we need to wait and see how the Supreme Court decides before, I don't think even that the White House is going to put them up for congressional approval even before that.
So many things happen, yet, the risk of nothing happening is still intact. Prashant, you said whether there would be a press communique or not. I would bet my money not on any official conversation, but a Truth Social post by Donald Trump.
That is the official channel of global diplomacy these days.
Jahangir, where does that leave the conversations that India and US are having? Not only did we hear from Donald Trump on Xi Jinping being a tough negotiator, he said that Prime Minister Modi also is a good friend and a strong negotiator here. What would you say, would be the outcome of the India-US deal conversations that would happen?
That's somewhat harder, right? In the sense that the first 25% tariffs, which is the IEEPA tariffs, right? Those were done on grounds of, unfair trade advantage that Presumably, that's what the alleged by the U.S. The other 25% is on, buying Russian oil. I really don't think that, at least not from my understanding, that there has been any significant progress on either side on either of the two issues. Now, geopolitics is geopolitics, and things can change overnight. So I wouldn't be surprised if there is some sort of an, coming down on both the U.S. and India's part. But it's hard to see the kind of fundamental differences that U.S. and India has on agriculture and things of that nature, where U.S. really wants to see India draw down trade barriers, India accepting those reduced trade barriers. You could see things happening in other directions, but I don't see that happening. And then, of course, there is still the concern over services tax. We know that the Hire Act was pulled off the Senate table, and most likely the Hire Act in its current form is unlikely to come back to the Senate table. But it can easily come back in some other form. My guess on H-1B visa is that there is a significant amount of opposition and concerns being raised by U.S. firms themselves for that to be negotiated or to be reduced. But by and large, it looks like a tough situation where don't really see what either of the two sides can offer to bring that 50% down to something more reasonable.
That court ruling is going to be interesting, right? Although I'm not very sure now how will markets react. If the court rules them are illegal, is it good news or bad news?
So that's a difficult question. So think about how is the 10-year being anchored? The 10-year right now is being anchored on the assumption that there is going to be around $300 to $350 billion of tariff revenues for this year and similar amounts for next year. That's what's giving you the anchoring of the 10-year rate. So if you're going to say that IEEPA tariffs are off, and we don't know what it will be replaced with, and we don't even know that what it'll be replaced with will be anywhere close to giving you the $300 to $350 billion of tariff revenues, then one of the largest anchors of the 10-year rate is off. At least till the U.S. comes back or reimposes with tariffs that satisfies the bond market. That's where the concern.
And Jahangir, very quickly, speaking of the bond market, Fed delivered 25 basis points yesterday, but then markets are a little worried because they're saying it's not a foregone conclusion that we'll give you another 25 bips in December.
Yeah.
Combined with this whole tariff uncertainty and whether that $300 billion, $350 billion will flow in or not, where does that leave policy over the next couple of months?
So again, I think the Chairman Powell sort of said it right, in the sense that, if you're facing fog and you can't see more than a few yards in front of you, you slow down, right? Which is basically what's happened with the government shutdown. The government shutdown may not have that big of an economic impact, but it's clearly having an impact on data flow. And with the lack of information, it's very difficult to see the Fed going, gung-ho on aggressive rate cuts in the absence of data on the labor market side. Our view is that, look, you are still going to get the 25 basis points of rate cut in December because if and when the government opens, most likely the labor market will show continued sign of weakness.
Okay. All right. So not changing your view for December. Thanks very much, Jahangir. Great conversation.
Sure.
And a lot more to talk about. Maybe we'll request you to come back once we have the outcome of this China-U.S. meeting, right? The first in 6 years. Thank you very much for joining us. Sure.